Happy weekend, everybody. Thought I would put together a real short video. This is another one of those seat of the pants kind of things. I've got a very small agenda, and I'll be doing a lot of this off the top of my head. Now, I haven't done my analysis on Friday's data yet, but I've seen a couple weird things I thought I'd post about. Well, let's get started. First thing is, I'm not a financial advisor, and I'm not allowed to tell you to trade certain things or manage your money or anything like that. I write a daily blog or a daily trading day blog on dark pool institutional trades. And my blog is my daily thoughts. This is how you get me on social media. I'm Brian Balance on Twitter, and there's my Substack information, and I give a little bit of intro and summary for free, and then also spy trades, and then I have a paid version that goes into a little bit more. I've got QQQ levels, and I keep track of, I'm very methodical in keeping track of SPY and QQQ levels, and those are at the bottom of every sheet. I also do things like tell you what the large trades were, unusual out of place trades, trend on the very large trades, and a little summary at the end. It's also got a 7-day free trial, so you can just click a button and see for free if you might like it. The first thing I noticed on Friday, and one of my buddies, Bruce at Volume Leaders, he said there's a whole bunch of trades on Friday, and I said, I know it's always these triple witch and quad witch, it's always a big day. I usually ignore that. And he goes, no, Rolls, it's worse this time. There's a whole bunch of number one trades. And he's got a whole lot more data than me and he keeps track. He's got years and years of data, and he's eventually going to get back to the beginning of time on SPY so that you'll be able to see everything that's ever traded on SPY if you want to. He said there was something like 100 tickers with number one trades in their history on Friday. So that's something to just be aware of. The dark pools were very active on Friday. Now, normally what I think is that's a bunch of dealer activity. They're rolling options forward, and what they really like to do is run price up at the beginning of the day and sell all their junk. Then they like to run price down toward the end of the day and then buy it back, so they roll their options forward. The options are expiring, and so they sell it at the high and then run the market down about 1%, and then they buy the low, and they kind of start all over again. If you look at my data that I keep track of, I've got this thing called my dashboard, and I call this macro trend, and I keep track of about 600 tickers and how many dollars traded during the day. If you look at this is $701 billion that traded, which is a lot, but it's always a lot on quad and triple witch days. And so I've even got code to ignore this and not include it in my 30-day moving average. And then you say, well, $700 billion, that's more than ever. Well, it's, not really. I've been keeping track of this for a few years. I used to do this manually, and then I thought it'd be a good idea to automate it, and I'd just watch a few things during the day, and I keep track of it. And yesterday's trades, total volume isn't as high as it's ever been. It's like the second highest since I've been keeping track. There's a bigger trade on 12/17/2021, and then you think, well, that was at the end of the world. They were getting out right there. And then you look at some of these others, and they might have been getting in right here for a little bit, or getting out. I'm not sure if you can really glean that. I was looking at the SPY chart today, and I don't really know. I think it's more important. It's not so important that there's super huge volume there. It's important where the super huge volume is in the chart. So let's look at that in just a minute, but I'm not going to do that yet. I'm going to talk a little bit about this thing. So there was a guy on the Elliott Wave Trader site, and there weren't many guys when I was following that site. There weren't many guys that I followed, but this guy Bunker, he was one of them, and I still like reading his stuff. And he's got a blog out there. And one of the things he likes to watch is this thing called BPSPX, which is the bullish percentage index. And he's got this little methodology that, and he's got some Keltners set up, and I like Keltners. I like Keltners too, but it's a very creative thing, and this is based on somebody named Terry Laundrie. He had this thing called a magic T, and Bunker trades these T's. Sometimes I wish I'd just let Bunker invest my money. It seems like he's right all the time, but maybe he doesn't post when he's wrong. Some people do that, but it looks like that he's right quite a bit, so I like watching his stuff, and then I like aligning his stuff with my stuff. Now, you can't do that too much or you'll never enter a trade. If you have 100 people that you follow, there's always somebody that says the market's messed up, and there's always somebody that says the market's going up. So I would recommend finding the people that are right most of the time and following those guys. Bunker is right a whole lot, and his stuff seems like it works. Now, I don't trade his stuff, but what I do is I align that with my stuff. And so when I see this, the bullish percentage index, what he likes to do is, after it leaves the bottom of this Keltner, what he likes to do is start watching. And he likes it when you go through this middle Keltner. And then he says, you need to get invested right there. And then you need to come out when it comes back down through there. Now, it doesn't always work, and I don't think it worked this time. That probably wasn't a real good trade right here. And sometimes it does weird stuff, like right here, it might go up and then pop back down a little bit. But this one might have been a good one to go up. You know, you could have caught a little bit of there. But what's going on right now is this thing's falling through the bottom really bad, and you think, well, the market really isn't in that bad of shape. Let's take a look at a 4-hour chart. The market's not really in that bad shape. You know, I told everybody I thought the dark pools were selling like crazy up here. And people thought, no, they're not, they're buying, Rolls. You're all wrong. And then it stayed up there. And then they thought, well, man, I know he's wrong. It stayed up here several days. And then even Ivy was kind of questioning me. She's my long-term investor. And she said, no, if we hop up in here and bang around and hop over this weekly Keltner, then maybe I'll get back in. But I'm not going to. Well, everybody was so bullish up here. Everybody thought I was wrong. And lo and behold, we start popping down. And now we're in that in-between state that dark pool people hate. They hate being in the in-between state. Well, anyway, let's look at this a little bit more. This is going down, and it's going down pretty bad to where some really important lows happen. Really important low happened in June. Really important low happened in October. We're kind of heading down. I mean, we're kind of heading down a little bit more here, and I wonder if it's going to go down more. And so this is bad. This is bearish. This is bearish stuff. All right. Let's go back to the SPY chart for a minute. And like I said, I'm not talking much about dark pools today. Now, I did some things. Oh shoot, I've got a different SPY chart. Everybody, give me a minute. I'm like, where are my giant trades? What in the heck happened to them? Well, they're on this chart. I've got two different charts. This is my long-term swing chart, and this is what I look at most of the time. And then this is like a day trading chart. I don't like to day trade, but my levels are easier to see on this chart, and I've got different time frames on here. I've got a 15-minute time frame, and I've got a 2-minute time frame. But I put all my levels on this chart. Now, if you look at this, about what they've been doing here, is they've been really messing with this on this 200-day moving average. They've been going over it and under it and banging on the top, and then they go over it, and they bang around on it some more, and that's kind of making me mad. I wish they would go to one side or the other. If you look at this chart, there's some super huge close prints. They like to hide trades in the close prints. Super huge close prints right here. At this level right here, and you can see, right around in here is where big close prints. Also, high volume close prints happened around in here too. High volume close prints happened up here. And now we've got high volume close prints that I typically ignore. It happened right here too. I think what I'm going to do is probably not draw another level here. I'm going to look at the data, and so there's another one like right around in here. So boom, boom, boom. We've got really high volume close prints. Now, what are they doing there? Well, I don't know. They keep banging around the same spot all the time, and they won't go one direction or the other. So that usually means that if we go down under these important levels and start zooming down, then you need to get really bearish and get scared. And if they start zooming over the top of these, like I thought that they might zoom over the top there, but and some people thought that I was really bullish that day, and I really wasn't. I said like be careful twice, and I said watch the levels 4 times, and I said there's some bullish stuff, but there's a lot of mixed signals here. Some people thought we were going to go up forever, and I thought, well, shoot, if we go over this $21 billion and we start heading up to Tweety, then maybe all this stuff is buys and they're ready to launch into outer space. But they didn't do that. They came back down and they did some more junk down in here. So I really don't like that either. And so what do you do when the dark pool data doesn't tell you which way to go? You got to look at other stuff. So anyway, the last thing I'm going to talk about, some fibs and SPY levels here. And I've about decided that I like looking at SPY better than ES for these kind of things. If you look at this, that's the 200-day moving average, this pink line right there. And I've turned off a lot of stuff. Bruce really gets on me for having too many lines on my chart, so I tried to clean this up, and I cleaned it up just for him, and I guess for some other people too that don't like busy charts. I love the busy charts, but a bunch of people don't. So if you look at what's going on here, we've got some kind of little trend line going up to watch. We've got some upside fibs. Remember in the last video, the upside fibs are yellow, and then they go up pretty high to like $462. And then I've got these. I probably ought to make those different color. I probably ought to make those green instead of yellow. And I got downside fibs which are red. And then I got something else that Bunker was talking about this week. He had drawn this 2020 trend line. So he took the low from 2020 during the COVID lows, and then he drew a line to the October lows, and I thought, well, golly, that's pretty smart, and I didn't think of that. But that's why you follow people, to get some ideas, and you might take some of their ideas and put them on your chart. So I thought that was a good idea, so I've put it on my chart. That's this little blue line right here. And one thing I really like is when a whole bunch of stuff comes together. When a whole bunch of stuff comes together, I really like it. And so if you look at this is the weekly Keltner bottom, which that's a pretty good place to enter sometimes. You got to watch it. Sometimes they'll fall right through the bottom, but lots of times this is the lows. The weekly Keltner is about as low as it gets sometimes. Well, look at this. That trend line is coming right through here. And then this ABC that I made with my Elliott wave here, see this ABC? This ABC has a 1618 extension. Look at this. Right in the weekly Keltner, right on this trend line. And it's like 3 things are coming together down here. I think that's really cool. I kind of like that. So they might be headed down here to like 372 or so, maybe 370. That would be a very interesting level to see, and that might be one of those line in the sand things that I talk about, where it's a do or die place. You're either right or wrong, and you can be right really fast or you can be wrong really fast. So I kind of like that, and I kind of wonder, based on this BPSPX chart, if they're going to just take it down some more. They might. And then these dark pool levels, if we start losing them, makes me wonder if they are sells. So anyway, we are kind of in a weird spot here, and it's what I call a neutral spot that I really don't know which way we're going to go, up or down. What they're doing is they're juicing up the big mega caps to hold the market up for some reason. They're killing all the banks. They're killing insurance companies. They killed solar on Friday. So they're killing all these things, but they're putting tons of money into Tesla and Microsoft and stuff like that to hold the market up. Now, are they going to zoom up from here? I'm not sure. But if this starts zooming down, this starts looking very interesting to me. And also, if we start coming up through here, through all these prints, and there's all this base of prints here, if we start zooming up here, I'm going to start believing that we're going to have a bullish cycle again. All right, well, I hope everybody enjoyed this video, and have a good weekend and a safe trading week next week.